So, good afternoon, everybody. Good to see you all. Thanks for joining me today for our afternoon session. I'm going to break some things down, have a look at what's going on. Obviously, this afternoon, if I remember correct, is the ECB, which has already sent out. No, it's not. I tell a lie. I could have sworn the ECB was today. Well, where the bloody hell's my calendar taking it then? I should always trust myself. I will never ever trust the multi-billion-dollar trading architecture software package, and yeah, I'll just believe in myself. But yeah, ECB has been and gone. The interest rate decision already came out, and we have the press conference starting in about 15 minutes' time. Now, after some further review of what's been occurring, I'm actually of the train of thought of not hosting the ECB event live. Um, so, what do you guys think? I mean, I'm happy to. By the way, I will just say the idea of sitting and not talking is that's okay. I can live with that. But I'd actually rather just dig in deep to the markets and see what's occurring this afternoon. So I'll leave the decision to you guys. What do you think? Don't make us listen to Blackguard. Well, that's a clear vote. What about everyone else? Can't just take one guy for it. As much as I love you, Scotty. Yep. All right. All right then. That seems like a pretty clear decision. Okay, cool. So we did have the ECB event this afternoon. The ECB rate decision was as expected. You can see on our Euro instrument. Where are you? There. That is the absolute cataclysmic result of the event itself. So absolutely nothing's going on, and I don't think there's going to be any major surprises. The reason that I generally will watch the press conference is to get any kind of indication of future monetary policy decisions that they, of course, might be looking at. Obviously, I am well aware that the chances of getting those nuggets of information are slim at best, but sometimes you do actually get lucky. Sometimes you do. But anyway, let's have a look from the top of the list and work our way down. First of all, we have a wall of green. I mean, okay, granted, some of these are like a 0.01%, 0.02% up, right? But still, it's so unusual to see everything rallying at the same time. I mean, the dollar against the China is on 0% change for today, so that's not even, that shouldn't even be red. UK FTSE is letting us down, and that doesn't come as a surprise considering the UK is like bottom of the barrel in the G8. But we really do have an entire green list of assets here at the moment, which is not common. That's not a usual thing. So let's go. First of all, looking at UK Brent, we had a pretty significant sell-off, followed up with a decent corrective, and don't even get me started on yesterday's stock market performance. It was nutty. I mean, it was real spicy, and definitely something I'm feeling a little bit dismayed at, considering I wasn't actually participating in yesterday's afternoon breakout. But we will get onto that, of course. It's the elephant in the room at the moment, isn't it? That 4.3% rally from the low to the high in the NAS 100. It was just insane. I mean, that we're going back to sort of the days of coronavirus and seeing the losses of 4%, 5%, and going into market blackout phases where the exchange paused and stuff. It was just crazy, absolutely crazy. But if you recall yesterday, even in my haze after my diabetic episode, I did say that I found it really interesting that the stocks were selling off as much as they did on the proviso of the information that was provided via the CPI. I just didn't think it was really necessary to see to have that much of a sell-off. But after we saw what happened in the following hours, it kind of makes sense, because of course we would have all of the selling off into the US Open in the sort of beginning of the US session, and then the buybacks began in the afternoon. So basically, we were just setting up the US traders. That's basically what we were doing yesterday. So anyway, back on track. What we're looking at the moment, UK Brent. We do have a pretty decent break of structure here. It is at the moment still untested. So let me pull up. Where's my bar? There we go. Thank you. Yeah, so it is untested at the moment. This is the level of liquidity to watch out for. So what I'm looking at here is potential turning point. If we go up to the larger time frames up at the daily here, you'll see that we're actually sat on top of a huge cash-rich area. We can see this because of all the highs and the lows in the market. We've had major inflection points occur pretty much for quite a significant amount of time since being here, and I don't think this is going to be any different. The last time we were down here, for example, sat around here back in sort of May, June time of last year, we got a move that was pretty significant off the back of that, rallying up to around 96.50 for a 36.6% gain. And I think we're probably going to see something similar, not in terms of the gain itself, because we'll be aiming for the descending level, but I think it's going to bounce back quite strong. So I would be of the train of thought of lining us up with the longs and looking at potential breaker structure areas that we can get ourselves in. So back down to the 50-minute time frame, we have a very broad trading margin here, of course. It's a pretty large one. But we also need to wait for this retest, and then we can kind of start plugging in. So the retest at the moment is underway. We've had one attempt here. We've had the second attempt here, which looks better. This is going to be annoying for me now, so I'm just going to separate that there. So once we come back down to this area in here, I will be looking to buy into oil. The first target profit's quite clear. Okay, so we're still going to be looking at that intraday theme and strategy for this. We're not going to look at anything longer term just at the moment. Looking to repeat the same waves that we've had 1, 2, 3, 4, 5 of here. So we've had 5 success, 1 failure. So that's a 1 to 5 return there. Based on that, it's pretty damn good probabilities. So we'll be looking to replicate this process yet again, looking for the price action to push down, then come back up, break structure. The structural break point is also, I would say, quite clear. That's going to be at this little area in here. So once price action pumps down into this area, 71.50, we start the rally, we break the structure. That's going to be at around this area in here for me. Target profit up at the high, the belly of this zone above, and then our stop loss is going to be nicely situated at about this point in here. And that's going to be a 1 to 2.13 approximately. Of course, we never know exactly where we're going to be, but that is trade idea number 1. Now, we cannot put a pending order in the market yet, okay? Unable to. Of course, we need to wait for the price action to come down to this area. Now, let's say, for example, the price action comes down into the big daily area again, okay? And we start sort of floating around in here. This trade idea here still remains the same, except for the fact that this level becomes your new break of structure point. So you will be looking to take the trade in here as opposed to in here. Okay, now that's going to yield not much of an increase in the risk reward ratio, but it will just simply allow you to get into the trade earlier. So instead of that, you'll have your option of executing there with your stop loss down there. To be fair, the risk reward ratio is increased ever so slightly. So you will get a slightly higher yield on the return, but it's not going to be earth-shattering. So I will give you guys the choice of just waiting for this secondary level to be broken, simply out of the fact that it's not actually going to incur much of a difference to the return of the trade. You're probably looking at a minus 0.2 return for taking the trade there instead of here. But at the same time, of course, you're offsetting some of that additional risk. I would deem this definitely to be the more powerful breaker structure area. That's without a doubt. Look at the inflection points. They're not here. They're here. This is the major breaker structure area. But I know and appreciate, for those conservatives out there, you might want to just make sure you clear out all of the inflection points first. And so therefore, this is the trade idea that you're getting going with. So let's move on to gold. Our favorite gold shiny stuff. The range is still in motion. It's still intact. But it does look and seem as though we may be going for a critical breakout and getting that positive imbalance of price. I.e. the break, close, and retest outside of the top of it. If that's the case, obviously we're going to be looking at a very, very different spectrum of trading in this one at the moment, considering we are consistently ranging at the all-time highs. So the all-time high in gold is the first high that was achieved. This rally that we're seeing at the moment today could actually form the new all-time high. It does look like it's got enough steam in it to do that. The all-time high in gold at the moment is situated at 25.3175, and we are trading just below that. However, if we do not go for that, then we will be looking for that counter trend breaker structure again to go for a range continuation. Now, in terms of the market state structure here, this is a ranging and volatile market state structure. Okay, so it's not quiet by any means. Volatile means that we get really sharp, fundamentally driven moves down and then market correctives, and vice versa. So you can see this all over the place. These random, very sharp moves that go to a certain area and then it continues trading higher again. I mean, frankly, if we were taking a short here, we still wouldn't have been stopped out in the range, but you would have had to have been holding on to this for a bloody long time. And honestly, for no more than a 1 to 2.5. So, it would fall to you guys to maybe cut that out because the money's just not working in your favor. I would probably, with a range of this size, and this just scrapes through the cusp of being able to do this with, similar to what we've seen in oil, where it's been such a huge sideways motion. I'm even on the wrong time frame here, but if we go up to the daily time frame and we look at what's been going on with oil here, and I know this isn't necessarily a range, it's more of a falling wedge, but if we look at the scope of this one, it's so significant that you have so many different opportunities, even ranges within this wedge, that you could have been trading in the midst of these price equilibrium points. You were able to do that. Median trading was absolutely fine. Gold is not that big. It's big enough, but it's not that big. So if you want to be trading to the median on this occasion, I will allow that. And I say that loosely, of course. At the end of the day, you are not literally employed by a fund, but just to give you that fund user experience, that's what the case would be. Okay, so you guys want to be, having a taste of what that's like, well, it would be you're not allowed, or you are allowed, or something like that. So if you want to be trading in between these margins at the highs or the lows, in this particular occasion, you will be allowed to do that. So looking at this gold area at the moment, the breaker structure point is going to be about here. That's going to be your BOS for the short. We've pushed into liquidity. We're looking for the rejection from big liquidity up here. This is an almighty level of liquidity, so make no mistake, you have that on side. Breaker structure point's going to be there. Target profit down at 75.04. And your stop loss nicely situated in between these two zones. Probably more on the upper side, just given the yield of return at the 50% point. I mean, you're looking at a 1 to 2.8, so I would definitely be happy of giving some of that back for the sake of the success of the trade and carrying that out at a 1 to 2.4, which would be what I'd be looking at. Now, this one, ladies and gentlemen, is a pending order availability. We are looking for a straight shot breaker structure trade, and so therefore the pending order is absolutely fine to utilize in this particular instance. In terms of technical risk factors, risk profiling in general, obviously, we've already got 2 stages of risk profiling done here. In terms of the third stage of risk profiling, your technical risk factor probably is going to be situated at around 25.11. That's where I would say it is. Now you can see where my cursor is. If you follow your eyes across, you can see all of the little miniature inflection points along this path, right up to current price action here as well, bearing in mind. I mean, this is the lows of the moves that took place yesterday evening. So we're very, very sort of still active around this area here. We're going for it, team. Literally right on the live event here. Look, gold's now formed a fresh all-time high. And it is really pumping up here. We've seen it. What's the high of the move so far? 25.34. And so far, really nice big all-time high. And 25.34.30, 25.35. Really nice big move. Now, I would think, and this is just, I'm just going to go out on a limb here and say this. I think that this could be a fake out, and that we will see a nice big explosive breakout move. It might even be a decent trading opportunity in hindsight. If we look at it tomorrow, it could have gone up to 25.48. But I think that the market will probably dip back down and come back down to 25.04. And it will catch a lot of retail traders out who are all piling in longs up at around the 25.40 area. That's what I think will happen. And then in a day or two's time, we'll see that market start popping and we'll start seeing the continuation. Don't forget about my long-term call. Okay, my long-term call for gold is 2075, 28, and 3,000. All right, so I'm still long-term very bullish. But day to day, looking at the activity of the market state structure at this moment in time, still looking like this is going to be probably ranging for a little while longer. So it'll be interesting to see. But anyway, pending order locked in the market, 1 to 2.4. TRF situated at around 25.11. Maybe 25.11, maybe a touch lower. And that's it. That's that one done. So, some of these are changing quite nicely now, I would say. Definitely had some dead space trading over the course of the last couple of days. But I think they really are starting to see a nice consistent turn now. This Aussie CAD, for example, was pretty decent down here. I don't like this though. Unfortunately, we've come down actually this morning at 8:30. We had that big dip down that came to 90.42. Now we're coming back up again. I need to see. I mean, I don't know about that really. It looks okay for a retest, but I want something a little bit more. So looking at this is the low. I will be looking at this area here as our high. And this is quite nice now. Very decent trading margins. There's no problem at all trading between these two areas. Now that we could be looking for that sort of trend continuation on the daily time frame. So looking at this, I'm going to be of the break of structure entry barrier again, which is great probably for most of you. We're going to be looking today at a rejection of the current area. Where's my, whoops, not that one. Where's my bar? There. So we're going to be looking at the rejection here, pushing back down into liquidity, retesting, capturing all of the money that's still in the market here, and then the continuation. Now, it's at this point that we're going to get interested in this, okay? So we are going to be looking at the continuation, okay? We are still bullish. Break of structure above there, target profit, belly of the zone above, and your stop losses at the 50% point, approximately, between these two zones. That's yielding a 1 to 2.14, which is again a really nice little return. I don't really think we're at too much of a high risk element of this one at the moment in the Aussie CAD. Looking back in time, this is a whopping level of money up here. Very cash rich. Still in recent history as well. I still think there's probably money up there. And so therefore it makes the chances of the price action going up to 91.105. So long as we break the structure, very feasible. If I just bring back this breaker structure area, let's just make sure we test this out, make sure it's okay. So I think that's pretty good. It becomes a slight element of unclear or lack of clarity, should I say, it around this area in here, but then it loses a lot of that as well as time goes on. I think we've got the rebound, we've got the retest, we come down into liquidity, we come up, we have a go, it comes back down again, it comes up, we get retest 1, retest 2, retest 3, comes up, comes down again, bounces. So I think that this is utilized enough to use. Also, the other thing I'm looking at, of course, are rejections leading to losses. So let's say, for example, do some great old hindsight trading here. We're going to look at sort of taking breaks of structured trade ideas. So let's say, for example, we take a BOS trade there. We're looking at the entry point. We're looking at the sort of stop loss at this area in here. We're going to get stopped out, right? We're going to get stopped out there. Now, if we take another break of structured trade idea there, possibly. Yeah, so that works. Yeah, that works. And then we drag that one right the way along. We're going to get stopped out here. I can't include this, to be honest with you guys, because that's just ridiculous news stuff. So we do have 2 stop outs, and then we have the win here. Okay, so that's just a clean-cut win. I'm not looking at any bullish moves, because at the moment we're not looking at short biases. But we have 1 win and 2 losses. Probability is not really on our side per se, except for the fact that this is a fundamentally driven move, which comes to this point, and then from this point, we break structure to the downside. So what do we think then is going on behind the scenes if this element, which has been keeping the price action at bay, is removed as a, it's not a factor after we see the size of what's going on in here and in here, right? The market comes up, pushes through into this area, and it hits a shitload of money. And that money is all sell side options. And so then the sell side opportunities shove the market through the floor till we continue on our way to the next zone down. So for me, that is still going to be the prime real estate, the one that we want to go for. And that's the bias. Right, let's have a look at the Aussie yen. So we're bullish in the Aussie CAD. Let me just stick some tags on these. So I'm bullish on oil, going to get that locked in. Gold, we're going to be looking down. Aussie CAD, we're looking up. Aussie yen. So do I want to blow my yen cross at the moment on the Aussie? I'll come back to the Aussie yen. Aussie NZD. This is another one, much larger than the Aussie CAD range, as you can sell, but at the same time, it looks really awesome. It genuinely does. So we're getting what seems to be a double top rejection from the big area liquidity up there at the moment. We've got a really nice median that we can utilize as well. In fact, the median here looks a bit strange, actually. It's probably more in the upper section of this. It's never going to be exact, I suppose. So that's there. Let me just drag that down a little bit, to be fair. Yeah, so that's about there. Which gives us, I think, still 2 pretty decent trading margins. The unfortunate thing on this is it's already bloody broken the structure, so that's a bit of a pain in the arse, isn't it? How far gone is it, though? That is the question. So if we... Well, actually, I'll tell you what. If that's the BOS, then we're basically coming to it now, aren't we? Yeah, my eyeballing it wasn't working properly then. I mean, this could even be an M reversal that's starting to form here as well, exactly identical to the one that formed. Oh my god, actually twice before. I mean, that's a disgusting looking M reversal, gotta be honest. It's not nice. But the second half of it was mixed up overnight, so I assume Aussie or NZD fundamentals. But we can actually see here, we've got the 1 M reversal, 2 kind of M reversal, and a 3 possibility. So that's interesting to see, isn't it? All of the big liquidity as well. So I think a short in the Aussie NZD could certainly be of value to us. Let's have a look. What's that coming up with? A 1 to 2.12. Yeah. Alright. I'm going to put a pending order in for 108.77. The stop loss for this is going to be a 108.843. And the target profit at 108.616. Right. Yeah. Okay. Let's move on. Aussie dollar. No, thank you. CAD Swiss. Had a little win in that one. He's had one hell of a move since then, though, hasn't it? My God. Thing is, though, I'm not really sure where to take it from here. Let's try and clear down some of these charts a little bit, actually. I don't need to clear everything down. I mean, frankly, I would probably still have that bloody one in there. I don't need that anymore. Don't need that. Don't need that. Yeah, I'm going to leave the CAD Swiss out, actually. I'm not a huge fan of this. Yeah. No, I'm going to sit that one out. I'm going to sit out the CAD Swiss. Not a huge fan. CAD against the yen. Yeah, it is a bit of a car crash, mate. Yeah. CAD against the yen. Good old trusty CJ, which isn't trusty at all. That's the trading margin to be done with. That's actually not been too bad. But it does look risky now, doesn't it? Yeah, it does look a little bit choppy. Let's check out the daily. Okay, so we've got a fair bit of money there, don't we? Well done, Michael. Yeah, bravo, mate. So we've got a lot of money in the market around this area in the CAD yen. Major inflection points taking place over time. Recent history would indicate that this is still active because of the move that we've had up here. We have a relatively broad M reversal. We have had a retest of the midpoint of the M reversal. Yeah, it's a very indecisive place long term. It is, yeah, because we've got a reversal pattern, bearish. We're on top of liquidity. We've had a stab at it. It's come up, but it's lost steam to the upside almost instantaneously, and it's coming down again. It looks like bearish. It looks like bear pressure's building. It does. That's what I would see from the daily. It does look like it's building up for a breakout to the downside, which, I mean, at this stage means no trading for us. We want to see that BCR underneath to get going. Are we going to be taking risk trading this in liquidity in the daily zone? I mean, it's definitely not something we haven't turned our noses away of all opportunities like that in the past. I'm still cautious. I've still got the cautious stance. And I still feel that is the right thing to do. So I'm probably going to give CAD yen a miss for the time being, but with the understanding that it is an interesting pair, and I would like to revisit it for potential trading opportunities in the coming trading days. I keep looking at this move in here. That's what I keep looking at, which is why I'm like iffing and umming about it, trying to talk myself out. But I'm looking at that move in there, and I'm thinking to myself, that is actually a really nice trading margin in between those two spaces. The risk-reward yield on that would be very good. But is it worth it, you know? I think what I'm going to do is I'm going to put an alarm in. That's what I'll do. We'll put an alarm in there. We'll wait for the market. If it triggers the alarm, we'll have a look at the move, the condition of the move, and then we'll go from there. We'll move on. Right, Euro Oz. What time is it, by the way? 2 o'clock. Okay. Yeah, that's right, James. Yeah, you're not wrong. Yeah, it's a W on the 15, and it's an M on the daily. Right, so we've got a relatively not super, but a relatively clean M reversal on the daily, and then on the 15 we've got the W. But frankly, we're always going to take the weight of the daily, aren't we? For something like that. Now, this daily chart looks very short. It does. It looks very bearish. Okay, let's have a look. Euro Oz. What's a crack-a-lackin'? Okay, so unfortunately with the Euro was, the move's already gone without us. Really nice criteria, beautiful order block, big nice breaker structure, very, very solid trading capacity this Euro was. But yeah, unfortunately for us, it's going to be a no-go because it's already left the station. So what we could be looking at potentially is the break of structure above for the long up to 166. Again, these trading margins are quite wild, and I wouldn't say that. Yeah, I'm not entirely certain of the consistency of these zones at the moment. I mean, don't get me wrong, they are inflection points for price action without a shadow of a doubt, but yeah, you got to be on the ball with your entries to make them work. So I think based on this area in here, I mean, it's already really the same zone I'm using, isn't it? It's just this zone here, really. And then I'll be looking at that breaker structure. Maybe increase the height on that one a bit. Yeah, so something like that. So then we have the long. And we'll be looking at the breaker structure there. Pending order. And you'll be having your stop loss below this zone. So that's 1 to 2.12 for that Euro Oz long. On the flip side of that, you could look at a BOS to the downside as well. Obviously, that's going to be no pending order at this stage because it hasn't happened yet. We need to see the price action push in and then you can short it. And that is a possibility. But I think this works quite nicely. So I'm going to keep that in there. Long Aussie CAD, long Euro Oz, and we're also short the Aussie NZD. Yeah. So we've got a little bit of a mixture there. I don't really want too much. I don't really want any more Australian dollar now. I'll tell you what we don't have though, team. We don't have something with the yen. So the Aussie yen's now out for the count. This Euro yen does not look too bad. So let's say, for example, we have this area in here. Judging from you, all of you out there, would you agree that if I was looking for a break of structure area and I was looking for a trading margin, that this here works? What do you guys think of that? For the trading margin between 156.40 and 155-ish. Yeah. Okay. Good. Yeah. Good stuff. So that's right. It is a nice trading margin. We've had some clear evidence of this working out in the past. In recent history, we've actually come up to this area up here to retest that quite nicely as well. This was actually not a bad margin to trade, but this is the real one. This is the real bit that I want to. Oh my god, we've got a guy who's had me on mute the entire stream. Right, just because of time, this is very time sensitive now. I'm going to have to get on and I will help him out. I will help him out shortly. I will help you out shortly, Julian. Let me that what poor guy. Right, I'll help you out, mate. I'll help you out after. Right, yeah. Okay, so we're going to look at the breaker structure trade below this area. Target profit down at the lows. Now, I would say that I'm probably being a bit optimistic with this supply and demand zone. I think I would feel safer actually having that there without increasing the width of just having that there, having that a little bit more deeper in. It's shortening the trading margin, but it is increasing the probability of the trade. So I'm going to be looking at a entry point at around 156.36, target profit around 155.66. And I'm going to be looking at my stop loss being about there for a 1 to 2. Well, 1 to 2.1, whatever. And that's going to be fixed pending order. I'm not going to provide a long for the euro yen at the moment. I am just short. And there is a reason for that. The reason being, guys, is because the breaker structure point for the long is here. That would be my approximate BOS area. And that is very tight. That's a very tight trading margin. And even with this breaker structure point, we've had high 1, high 2, high 3, low 4, high 5, low 6, low 7, low 8, high 9. I forgot where I was then. So even then, you could say that actually this is probably an even greater breaker structure area to go for, which is then just leaving you with next to nothing. So not going to do the long. Right, really going to have to think about time now. I might have to split this FX session into 2 halves. Right, let's get the Euro NZ. Well, is there anything in this one yet? Yeah, it's had some solid margins in the past. I'm not really seeing the moves from here though. No, because it's trading right bang in the center or something. Still trading opportunities available in the Euro NZD, without a doubt. Still really good instrument, nice range. Couple of range fake outs here. We've had these 2 areas up here to contend with. This is the breaker structure point for the shorts. But where we're trading at the moment, it's going to be at least a few hours before any kind of trading thing sets up for us. And a few hours away from now is going to be 5:30 in the evening. So I'm going to leave that one out until tomorrow. Euro USD. I know this is one of Luke's absolute all-time favourites. If you're listening there, Luke, little shout out to you there, mate, for the euro dollar. So Euro USD at this stage, probably nothing there, as there never is for me. Yeah, just not seeing it right now. We do have a bit of a retest going on, I suppose. And we do have a relatively good margin down to around 109.50. So something potentially to look at tomorrow. But again, not yet. I'll tell you what I will do, though. I will look at the lows of that being an entry point. I will look at the liquidity sat in this space as a potential target. And then I will put an alarm in there to let me know if it pings. Right, team. I am going to wrap up the first half of the FX asset basket there. And I'm going to get on with the US stocks because we're at 2:10 now. And you guys have already, we're already there. So let's go down, have a look at the US stocks this afternoon as well. And then I can let you get away and have a hopeful cracking US session. So this is what I was talking about at the beginning of the session. My God, it's just snapped every single element of liquidity I've had in the charts that we've been utilizing for the price action in half. All of them. It just sailed all the way through. And it even gave us a break close and a retest at the end just to say thank you very much before then continuing to rally another 0.75%. It was an amazing move yesterday, all of which I got nothing from. Now, looking at where this asset's trading at the moment, these US tech stocks, it's in a bit of a dire location. It's in a dire location because it's not at any major inflection point. It's trading in the middle. After a 4.3% rally, I am expecting this to sell off. I don't think we're going to end up right back down at the previous lows in the next 4 hours or something ridiculous. But I do think it's time for it to pull back and have as long as TJ's here, a deeper corrective. I do think that's the situation that we'll probably see today. So I'm going to be utilizing that as best I can. We're going to be looking at a breaker structure on the 15-minute time frame. We're trading at around 19.25.5 at the moment. The breaker structure point's going to be there. Go down to the 1 minute chart. So consider this another trading margin that we'll get to in a moment. However, breaker structure below here, and we'll see a nice fall off to here at 19.10. Stop loss for this one is going to be right down here because that is still a nice margin above the zone. And that's going to yield a whopping 1 to 2.8. Ridiculous. Really, really nice. So that's trade idea number 1. Trade idea number 2 is a short from above where we are at the moment. So it's going to be waiting for price to come up to this area, then breaking structure, which is at this area. If you can see that running along there, really nice structural point. And then that's going to be short down to this area. Now, for those of you out there that like managing the trades and dragging the targets and stuff like that, you do if you are on the ball. And I repeat, it must be on the ball. You have the opportunity for a significant return today because of where this could go. Now, your stop loss for a trade like this is obviously going to be above the inflection point high, the anchor point high. So let's say, for example, we're aiming for about here for the inflection point, right? This is where most of the highs have come to. Yes, we've had a couple of that have sort of faked out here. That's fine, but I'm going for quantity of the areas that have been reactive to it. So if we push up into this area, and then we break structure, which is situated here. That's going to be your structural sort of level. Then our entry is exactly where I put it. The stop loss, you have the opportunity of putting it above here to have all of this inside your stop loss. And that's going to go there. And that's going to be like your baseline 1 to 1.7, which ain't great, right? But I personally would have it either like this or unbelievably have it above the breaker structure high. And that's going to yield a 1 to 3.5 based on a set and forget style trade from this high. So we push up, we reject, we break structure, stop loss, target, entry, 1 to 3.5. If you have the intention of taking the larger trade, it could, I know it sounds ridiculous and I hate promoting stuff like this, but you could genuinely end up with like a 1 to 11 today if the market decides to go down to where I believe it will. On the proviso that you do intend to manage the trade. And I want you guys to not instantly think, oh yeah, big risk reward, so I'm instantly going to try and manage the trade because of that return. That's the wrong attitude. And if you have that attitude, then you need to stick to the fixed set and forget trade of a 1 to 3.5 or whatever it is. That's what you need to stick to if you have that attitude. If you are, in the mindset of managing the trade though, and you're comfortable with that, then that's an option. But I would have the stop loss higher. I would actually go for a crappy starting stop loss of a 1 to 1.8 or a 1 to 1.7 with the intention of maximizing those returns via the management process, lending itself to a 1 to 3.5, a 1 to 5.3, sorry. So that's the way I would handle that. If you're going for a trade idea that's a 1 to 3.6 and then you're managing the trade out, I mean, it could still work, but a 1 to 11 just seems, I don't know, it just seems a little bit YouTube guru style trading, which always looks good on camera and never ever works out in reality. And no, James, don't call me a guru. Alvin Star. Oh, yeah. Yeah, okay, yeah. To be fair, yeah. I'd like that one for my next YouTube vid. Mate, if I actually pulled one off, then yeah, probably. Yeah, definitely. I'll be there, throwing my fake 50 quid notes out, fun coupons. Yeah, mate. That'd be me. Wearing my big gold dollar chain around my neck. Could you imagine me like that? I mean, seriously. Right, anyway, sorry. Going off on a tangent here. We've got like 15 minutes to go until the open. So, yeah. So that's that, okay? That's the setup for the NAS 100. There is long capability, okay? So if you want to take a long, it's a 15-minute BCR of this area. Above that 15-minute high. 15-minute. There's no breaking, there's no cutting corners here, okay? It's a 15-minute BCR, and then you'll be looking to take the trade idea back up to around this area in here. You see quite a lot of inflection points at around this area. There's a TRF there, bang in the middle, but you don't really need to worry about that one. It's a 15-minute break close retest out at the top of 1935, and then you'd be looking to take the trade up to 1943. I cannot believe that that would be what happens today, but you do have the capacity there. We have to. So, you know, you'd be looking at probably around about this for the trade. Maybe a 1 to 2.3, depending on where your execution is. Okay. What you might find, in actual fact, is the market comes up to this area first upon the initial breakout, and then comes back down to this area, in which case you can short it as well. Wait for the break of structure, and then you can short from this point of liquidity back down to the lows. You have every opportunity to do that. That is exactly what I will be doing, if that's what happens. All right, so lots and lots of things going on with this NAS 100 team. You need to be taking note, paying close attention, because there is lots that will be going on in here today. Just make sure you have the zones, you know where those areas, those pockets of liquidity are, and you're trading between, just like the ladder process that we've been doing for years. Right, let's have a look at the Dow Jones then. So the Dow Jones, actually, to be honest with you, just like the NAS, is in a great location. Actually, not hugely like the NAS, but it's in a great location. We're trading up away from this major area of liquidity. It did not have the move the NAS had yesterday. Don't get me wrong, it was a huge move, but it's trading up at these big areas of liquidity at the moment. Much more of a difficult path of least resistance to manage. Yeah, no worries, Nadia. Yeah, okay, that's fine. Take care. Yep, see you later. So we will be looking at the trade idea running from below there down to the lows. Let's go to the 1 minute time frame. So you've got trading opportunities all over the place. I'm going to go double time on this now, guys. Okay. So you've got the breaker structure trades for the short. Okay. They look like this. And these are tight trading margins here. We won't be messing around with these for too long. You've obviously got the long as well from the other side. Looking at those breaker structure areas, wherever they are. Remember that the risk reward has to work, so if it doesn't, you don't take the trade. And then you've got the same on the other side. You've got the short upon a breaker structure of that median. You've got the long upon the rejection of liquidity. You've also got the short where, hey, no, I want to delete that. See you later. We've also got the short down here. Okay, and then you've also got a long from up there, from down there. Okay, so again, really, really nice points of liquidity that we can utilize. Make sure you have your breaker structure areas outlined. You could, if you have messy charts from the previous trading days, you still have your breaker structure points in there. So for example, this trade idea here is going to be an entry of about there. Your target profits obviously here. Your stop loss is 50% point. I mean, these trades are averaging out to be a 1 to 2.5, you know, on average. And that's really good. I mean, we're going to be looking at some good returns today. Let's keep our fingers crossed the market after yesterday still has some steam left in it. It might be a flip-flop event. Hopefully not. And we're going to get some of that increased trading volume from the US guys, and we'll be able to take some wins home nice and quick. Right, team, I'm going to wrap things up there. We have only got 10 minutes to go. I know it's been a bit of a longer one today. But I hope you all have a really good session this afternoon. Best of luck out there, guys. Get ready for it. Grab yourselves a coffee or whatever you need. And yeah, look forward to trading alongside you and seeing what we can do. So take care, guys. Trade safe, and I'll see you then. Bye-bye.